Welcome to the Contractor's Secret Weapon radio podcast, the show dedicated to helping contractors, remodelers, painters, roofers, and others in the construction industry gain an unfair advantage over their competition. Get ready for some inspiration, some encouragement, some proven business building strategies, and a couple of new ideas that can take your business to the next level and beyond. And now, broadcasting from the Contractor's Secret Weapon Studios in Southern Florida, Dave Negri.
Hello, everyone, and welcome to another great episode of the Contractor's Secret Weapon Podcast. This is the show where the more you listen, the bigger the competitive advantage you will have over your competition. And hey, who doesn't want that? My name is Dave Negri, and I am the Contractor's Secret Weapon. I'm a serial entrepreneur. I've created this show to share some marketing and business building strategies and some of the countless lessons that I've learned over the past 30 years creating and building multiple businesses. I have a great show to share with you today, but before we get into the conversation, I want to do a shout out to our sponsors and highlight just some of the things that they offer that can help you in your business today.
Running a small business is no easy task, and I should know because I had a service company for almost 10 years. I am the founder of a software called RadiusBomb, and it's unbelievable. And for all the listeners of Contractor's Secret Weapon, we have a special offer for you to check out. If you want to send hyper-targeted, laser-focused, super personalized postcards to your exact prospects using a map while sitting in your underwear, then go to contractorsecretweapon.com/RadiusBomb, and we'll give you your first 100 postcards for free. Just go to contractorsecretweapon.com/RadiusBomb.
Hey, is your phone ringing enough? Do you want it to ring more with highly motivated and qualified buyers that contact you, the contractor, directly? No more waiting for the phone to ring. Just answer that phone. Best Home Services leads are dedicated to making your phone ring with motivated buyers that call you directly. There's no obligation to talk with them. Just go to contractorsecretweapon.com/money. Fill out the form to secure your discount on the setup fee. Do it today. This special will not last forever. Check them out at contractorsecretweapon.com/money. Hey, this is Dave Negri here with Contractor Secret Weapon. I am so glad you're here today just to stop by to see what we've got in store for you. Listen, if you haven't been to our website lately, you need to go there. I've put together some awesome report for you for marketing strategies that can flood your business with customers. And you can download it on the website, front page, get it today. Because these strategies really work. I've used them, and that's why I put them together for you. And for those of you guys that really don't like to read, maybe, I made an audiobook for you. So with this voice, what the heck? Go get your download right now. And so we've got some fun and interesting topics for you coming up in the very near future. Today we have an awesome talk for you today, and so let's really just get into that right now. Hey, I just want to welcome Jim Mosquera today. He's a published author of fiction and nonfiction and a business professional. He wants people to understand the world around them and think for themselves, and currently he's the principal at Sentinel Consulting, a business financing and debt mediation firm. He also operates the economic and financial website called The Sentinel. He contributes financial and economic articles to various publications, and according to the Dun & Bradstreet, in the next 60 minutes, 12 businesses will file for bankruptcy, and another 317 will have suits, liens, or judgments filed against them. And of course, Jim's company is here to help you improve the financial viability of your business. Sometimes personal credit problems bleed over into business, and his goal is to avoid businesses from becoming another statistic. And he's also a bilingual practice. Jim, thanks so much for being with us today.
Hey, Dave, thanks a lot for having me on your show.
Cool. So tell us a little bit more how you got involved and started into this line of work.
Well, I probably took a little bit of a circuitous path here. My academic background is actually in engineering. I have a couple of degrees in engineering, and after I got my engineering degrees, I went on to the world of telecommunications and data and voice networks. So data and voice networking. So that's really where I cut my teeth, if you will, professionally. Had a lot of different responsibilities within that realm. And during the time that I was professionally employed, in a Fortune 25 company, I always had my hand in money or, doing things, researching about money or banking. I took out a Series 3 license for myself, which is actually someone that can manage commodity futures money, and never actually pulled the trigger on going forward with that. But I was always very, very close to it. And around 2008, 2009, I began writing for an online journal that was called Examiner.com. And for a while, they were actually one of the fastest growing online newspapers, if you will, at the time. And I had a column on there where I wrote about, financial and economic topics. And obviously small business was certainly, something that I wrote about. Around 2010, I published my first nonfiction book, and it was in what I call part of my Escaping Oz series. And that was all about the economy and the financial markets, kind of some of the things that the economy had gone through before, just recently, I guess, before I'd written that book. And then I terminated my career in the telecommunications firm. My company offered an opportunity, a buyout, if you will, to leave, and I raised my hand. And knowing that I had all these different interests, I started this company that we're going to talk about today, Sentinel Consulting, right about 4 years ago. And it's a practice that is oriented on helping small to mid-sized businesses, because small to mid-sized businesses, if you pay attention to what's going on in the economy, that's really the engine of what makes the economy grow. And I talk about some of the companies that you see today, like a Dell computer, Google, if you want to use that as an example, Facebook, some of the technology companies, they were small companies at one point in time, and obviously now they're behemoths, in the industry. So I've always been very, very keen on the economy and the financial markets. And so what I'm trying to do now is bring that expertise to the small and mid-sized business owner.
Wow, that's pretty awesome. So with the consulting, and what type of consulting does your firm do? Do they do different aspects?
Yeah, what I try to do with my consulting practice is I have what I'll call 3 pillars. One of the pillars is what I'll call generalized small business consulting, which is I can identify problems that I may see in a business just via an interrogatory with the small business owner, ask a lot of questions about how things are running. And even though I don't have an accounting degree and I don't have a law degree, there's certain things just because of having, just developed my own business that I understand that I need to see in others. Because I mentioned earlier that I have a technology background, that's something that's easy to see from an operational standpoint. Now, I don't resolve those problems for the business. I identify them, and then usually I can bring in other partners to help them resolve that. So that's one pillar of the business where you kind of identify some of the problems that you see from an operational standpoint that then obviously would compromise viability later. One thing that I do also within that practice is try to help business owners stay focused. And if you go to my website at sentinelconsulting.biz, if you go under the selection About Us, you'll see 3 little video skits that I did there with a business partner of mine. And in the first skit, it shows a small business owner, very, very excited. She wants to, branch out into something else. And I kind of caution her and say, well, you need to consider a few things. And sometimes those decisions that small business owners make, particularly, early on in the life cycle of that business, can be very, very fatal later. It's certainly or detrimental to their operation. And so that's part of it as well. And sometimes that means just kind of moving away from the core of what you're good at, and you doing that prematurely. The second pillar is what I'll call alternative finance. After 2008, the financial crisis set in force regulations and rules and methods, if you will, for the commercial banking establishment. They became generally more conservative, and bankers are conservative by nature. But the financial crisis obviously created a different level of conservatism. Some of it was self-imposed, but some of it was also imposed from the regulatory authorities. So it became a little bit more challenging, some would say significantly more challenging for small to mid-sized business owners to acquire financing. So a niche market really blossomed, I guess, after that period of time. That is what I'll call categorized lending. And there's all kinds of different, let's say, niches that deal with specific types of lending. You know, sometimes it may just relate to equipment. Sometimes it may relate to small unsecured loans, small being up to maybe $500,000. There's asset-based lending that's part of that as well, which is you've got something that you need to do right now in order to receive this cash in the future, but you don't have the cash right now, and you need some capital to make that happen in the future. And so there's a pretty significant market there for what I'll call asset-based lending. There's different types of SBA lending with very, very specialized lenders. And another one would be like merchant credit card processing, banking advances. Those get, again, very, very specialized depending on the type of industry. For like the merchant credit card advances, obviously, if you take a credit card, then you'll be eligible for something like that. But again, even that is not for everybody. So it's important to have somebody that understands not just that landscape, but maybe where you fall within that. And what's best suited for your business, particularly at, wherever you are in your life cycle of growth. Right. And the third pillar, Dave, is what I'll call debt mediation. And debt mediation is we kind of go through a business's life cycle. There are, again, pitfalls that they may encounter along the way. Oftentimes, it's, as I mentioned earlier, in the consulting pillar where maybe somebody makes a decision that adversely affects them later. Maybe their financing plan wasn't good or non-existent. And so then inevitably what will happen is they will find themselves in trouble with their creditors, and that leads to civil litigation. And so what my practice does is it helps them to resolve that matter in a financial manner as opposed to a legal manner. And that's very important to understand because these cases of civil litigation that are debt-related, and that's what I'm only referring to, debt-related civil litigation cases, when they arrive in court, they don't really have what you would consider a true resolution path, because more often than not, the defendant, which again is a small business owner, is going to lose that case in court. So a lot of times what happens is the defendant, the small business owners, may hire an attorney. Well, the attorney really can't spin that case in their favor. So you have attorney's fees that are associated with that for you as the defendant. And then when I say not if, but when you probably will lose that case come judgment, you will owe your original debt. Yeah. You will owe for your attorney, and then you will also owe for the plaintiff's attorney as well, because that's how a lot of the contracts are written. And what's really more amazing about all that is even after all that happens, from the creditor standpoint, so you're the plaintiff, all they have at that point is a piece of paper that says you have won a judgment against small business owner. But still in that transaction, no cash has been exchanged. So you can see how all that doesn't create, the end resolution that either party wants. And sometimes if the if the debtor, the small business owner, has the means to hire an attorney, well, if you're the creditor, you're thinking, well, geez, he doesn't have enough money to pay me, but he has enough money to hire an attorney. So that doesn't create a good environment as well. Yeah, I would imagine. And the other thing that I've noticed, and again, the research that I've done has been where I'm located in Missouri. There's a lot of small businesses that when they get sued like that, they don't even respond. And that means that they will lose by default in court. And when they lose by default, you still have the same process where you have the original debt, probably interest charges and penalties, and then you will also owe for the plaintiff attorney as well. So the whole
I'm sorry. So you're just minus one attorney.
Yeah, exactly. That's it. That's exactly right. You just save your own defendants. But the problem with that is that now you have a default judgment against you, right, and that has an impairment in your ability to acquire credit if you can acquire it at all. So it's just what I really want to stress in that last pillar of debt mediation is that the court systems are not well suited to resolving financial disputes, and that's well known. It's understood. I have a friend who's a judge here in Missouri, and he told me that those are the cases that he least wants to see because he really can't create any sort of positive judicial effect on it. I mean, he understands it's a financial problem. The other side understands it's a financial problem. But in the end, again, that's not the place to resolve it. So my goal in that process, Dave, is to resolve that matter financially out of court.
Well, yeah, that makes sense, because if you can resolve that out of court, then you don't get a legal judgment against you. It's easier. Let's face it. If you're, whatever the case may be, you have to pay money, then mediation would be the best, because at least you've got a business that may be making a profit that you can, or assets that you can borrow money against to resolve this. Whereas, like you said, if you have a default judgment against you, you got zip, zero, nada.
Yeah, and because I mentioned earlier that I write about these topics in kind of the macro economy as a whole, I mean, I have a pretty good understanding that, this debt overhang that sits on the nation, whether it's on a fiscal government level, on a personal level, whether that's student loans, automobile loans, credit card debt. There's a lot of debt stress in this country right now as we speak in 2018, despite what you hear of, we've got these low unemployment rates, historical stock market numbers, good interest rates. Despite all that, I see a lot. I mean, I see this huge debt overhang, and I know, just as an analytical economist, that debt's not going to be resolved. It's not going to be paid off, and I think that's something that we need to start conditioning ourselves. And this is what I'm trying to do, obviously, at a much smaller level, conditioning ourselves to understanding how we have to resolve these debt problems. And these debt problems are only going to be resolved by a mediation, a restructuring is another word that's used, because the debts will never be paid off in full. And so, you try to bring that discipline that you might see as an example through a Chapter 11 or a Chapter 13, where, you hear these large companies when you hear, oh, they filed for bankruptcy, but it's not liquidation. They just want to restructure. Well, that's a way to do it. And as a matter of fact, the current president of the United States, he's had, I believe, several bankruptcies. I don't know if they were restructurings or liquidations, but it's a process that you have to go through in order to resolve financial problems. It's just that when you hear about it from these very, very large companies, that's a very, very expensive and lengthy process to go through, because those companies have monies, they have armies of attorneys, accountants, tax specialists, whatever the case may be. The small to mid-sized business owner doesn't have that. Right. And so what I'm trying to do is let's simplify that process by arriving at the same thing that you see in the big, official restructurings, and do it at a smaller scale and hopefully at a lesser cost. Now, I will caution also that there may be some situations that cannot be resolved via a restructuring process or a mediation process like what I'm advocating, and that client may in fact end up in a liquidation bankruptcy. That's something else that I think you'll see as the economy begins to deteriorate. You'll see more and more of those things happen. But again, the central theme that I want to come across to your listeners is that, restructuring and mediation is a way to resolve some of these issues, and a way to do it outside of the judicial system and do it from a financial perspective. Right,
and it's probably the less painful way in the end. I would imagine.
Well, and again, I'm not trying to throw daggers at attorneys, but
sure. No,
when you have a lot of these attorneys involved in these types of cases, and again, I'm talking about these lower level, small to mid-sized business cases, there's really not a lot that they can do to resolve it. Now, could they do some of the same things that I'm doing? Yeah, they could, but they probably won't, because that's not, that's not within their repertoire. They're probably not going to do financial analysis, because again, that's not really what they're trained to do. And they may not even want to do that, right? They get paid, they get paid to do different things, and they have different expertise. So my goal is, again, try to keep it out of. And by the time, let's clarify something. By the time that defendant, that small business owner, finds themselves under civil litigation, they're going to have to find a lawyer to respond to the litigation, because typically you're going to have about 30 days, maybe 60 days to respond. My goal is, okay, create the response, get another firm involved so you can start having discussions with the plaintiff attorney to identify the firm as a restructuring firm. Here's what you're trying to accomplish. And again, it's important to have a very, very transparent negotiation. So the other side, the plaintiff side, understands that, hey, we're trying to look out also. I mean, the client obviously is the defendant, but on the other hand, we want to try to bring this thing to a resolution so you, Mr. Plaintiff, will see some cash out of this settlement.
Right. Wow, that's all kind of interesting, and I know that, like you said earlier, there's with the debt that continues to roll up, not just on the government side, but on the personal side too. Here's the funny thing, I was just looking at some statistics, and they were saying that the average person couldn't come up with $2,000 for an emergency.
Yeah, and actually, I read an article the other day that was citing the same thing, but the figure was lower than $2,000.
Really?
Yeah. So, and again, I'm glad you brought that up, Dave, because one of the things that I see in the practice that cannot be separated, if you will, for a small business owner. And look at it this way: if you're a very, very large business and you're incorporated and you've issued shares, I mean, your ability to borrow money is completely different than a small business owner who then has to pledge, their personal credit against any sort of financing. Not all of them, but in many cases that's what's important. So then what you look at is, well, what's that small business owner's personal credit score? If it's below 680, maybe 650, now all of a sudden there's many, if not all, banks that probably aren't going to have that same discussion with you that they did before. And so that's where you bring in, again, the alternative finance universe that I try to represent for my clients.
Sure.
But what's also interesting about that is that the personal credit side encumbers what a small business owner can do on the business credit side. And so it's important to try to make sure that, you've got your credit score where it needs to be. And one thing that I've been able to do here within the last year is try to offer an avenue, if you will, for small business, mid-sized business clients, and maybe their credit score isn't really where it needs to be. And so I've got some partners now that can help with that. And there's another partner that I have that actually is involved in what I'll call personal credit debt relief, which is kind of similar to what I do on the business side, but they do it on the personal credit side. And I can tell you that here where I am, and I'm located in St. Charles County, which is part of the St. Louis metropolitan area in Missouri, there are a number of lawsuits that I see on a weekly basis. And again, we're talking about a relatively healthy economy where there are just, oodles of individuals that are being sued by credit card companies for delinquencies. And again, in some of those cases, they are business owners. And in some cases, obviously, they're not.
Sure.
There's also student debt that we know is becoming more and more delinquent. So we know that student debt can be very, very old in some cases. And I just read a statistic that shows as student debt gets older, the likelihood of it being overdue and delinquent increases. And so what that tells me is that there's probably some business owners out there today that have student debt that are delinquent on that student debt, And so at some point, that's going to come up for litigation. And so you really have to try to get the personal credit side in many cases healthier, okay? Because that could impair the ability to get credit, or if it doesn't impair the ability to get credit, you will pay higher rates than somebody that doesn't. And so that's why it's, your personal credit score is very important for a small and mid-sized business owner.
Amazing. Now, can you, can you apply for business credit and have it not interfere with your personal credit, or is it just always your personal credit is always going to interfere or measure up, let's put it, not interfere, but measure somehow?
Well, it depends on the type of business credit that you're achieving or trying to acquire. So like in the example that I gave earlier, if you're doing some asset-based lending, a financial institution, and I'll define a little bit more about this alternative lending universe and who it's comprised of, but this lending organization then is less concerned about your credit worthiness and is more concerned about the credit worthiness of the people or the businesses that you're dealing with on that asset. So as an example, Let's say that, Dave, you produce these widgets and somebody's asked you to produce 1 million of these widgets, and you say, great, I've got this huge purchase order. I'm going to start producing them, but the distributor of these widgets, they're not going to be able to pay me for 90 days. So you need cash right now for the manufacture of these widgets. If somebody's going to loan you some money for the production of those widgets, they're going to be a little bit less concerned about your credit worthiness and more about the credit worthiness of that distributor that's buying all these widgets, right?
Makes sense.
So there, is your credit score important? Yes, but not as important as the credit score of that widget distributor, because that's ultimately who's going to be responsible for paying back, in this case, the lender, the specialized lender. So the answer is yes sometimes and no sometimes.
Makes sense. Yeah, because everything is. But I think it's been great for this whole alternative financing for business owners, because the banks, I know it gets harder and harder to do business with them, doesn't it?
Well, and this is a great opportunity to try to define this alternative lending universe. So the alternative lending universe could consist of what I'll call private finance companies, and that could be you and me, Dave. We have a line of credit from a bank, and we're borrowing that line of credit at, say, prime rate, because we're good guys, good customers, good credit scores. And then what we decide, okay, we're going to create these small lending pools for small businesses. So you're in Florida, I'm in Missouri, and you start making loans in Florida, I start making loans in Missouri, and maybe we have this guy that works for us, and he's a crack underwriter. He's got this great software with artificial intelligence, and he determines, okay, is this a good credit risk? Here's what the interest rate should be, term, and so forth. So that's one model where, you have what I call private finance companies. Another model is you and I go into business, Dave, and we solicit in investor pools of money, and we aggregate all this money, and then kind of the same way as before, we've got this crack underwriter, and he decides, whether these loans are good or not, and then we pay our investors, some interest rate. Sure. As like they're basically interest rate on notes, if you will. So that's another part of the alternative lending universe. And then another one is simply what I'll call banks that tend to specialize in one type of lending over another. And they're banks, they may be FDIC insured. And that's another part of the universe. So it's really kind of a very diverse, if you will, universe. But understanding that universe as an individual, a small, mid-sized business owner, it can be very, very complicated.
Interesting, but it's not their options. There's more options, more so now than there ever were before.
And I think you just hit the nail on the head, Dave. Is that's the key? Is that as a small business owner, you have credit available. Just understand that these options may or may not be necessarily as competitive as you would have been able to get from a commercial bank. The commercial bank for many types of loans probably is going to be the best. Not always, but probably is going to be, for like for like comparison, they're going to have better rates because, again, they're taking a better credit, so it's a better risk for them.
Sure.
And one thing it's important also to understand for how a bank lends and their conservatism. I have money in the bank and it's deposited in CDs or, savings account or what have you, checking account. Well, it's important for me as a depositor to have confidence that my bank is lending out money in a very responsible manner. And that's a lot of, the rigor, if you will, that banks are faced with today from regulatory agencies, because obviously the worst thing that could ever happen in a country economically is that you have a bank run. So if you lose confidence in the banking system, that's very, very bad for everybody and the economy as a whole. So part of it is, let's be appreciative of the fact that bankers, a lot of the bankers, at least that I know, aren't making, willy-nilly bets with your deposit money, right? And I'm separating all this from banks that engage in, very risky behavior with derivatives trading and so forth, which is a whole nother topic. But so again, bankers serve a very, very important role in being, good stewards of our deposit money.
Yeah, that's really awesome. That's a great way to look at it. Because I know that a lot of times bankers get bad raps for just saying no, but there again, they have to be conservative.
That's right.
Yeah. So for Well, okay, this is going to be a hard one to swallow for a lot of guys. So, you're in a situation, you're there, and it's too late to go backwards. You need to go forward. So, stuff like this is one of the reasons that, that we brought Jim on so that he can explain this stuff to you so that you're there. So, these are avenues that you can discuss further with Jim or people like Jim, and so that is pretty cool. So Jim, we're getting close to the end now. Is there anything in the back of your mind that you wanted to talk about, but we just didn't really have or didn't bring it out?
Well, I think it's just on another kind of subtopic here. As I mentioned, I do a lot of writing on the economy and the financial markets as a whole. I think it's important to kind of have a good sense of what's going on, not just in the broad economy, but really to have a good sense of what's going on in your local economy, and to have an understanding of why you're going to do the things that you're going to do as a small business owner. Is it the right time to expand? Maybe it is, maybe it isn't. What markets are you approaching? Look at your customer base. Is your customer base tend to be overly focused on a small number of customers that, if one customer has some sort of an economic impairment, how is that going to affect your business, right? So again, some of this stuff requires some research on the individual business owner's part. Others, some reading, maybe consulting with people like myself and others. It's really more than just looking at in your own business, right? We talk a lot about how business owners spend a lot of time, working in their business but not on their business.
Yeah.
And part of it kind of is having that awareness of what's around them, understanding their customer base, your local economy. What sort of things could impact you as a business owner that have nothing to do with what you're doing as a business, but the things around you.
Right. I know. It's like we're at the top of a cycle, or getting close to the top of a cycle. I was just reading a report the other day. There's last year Americans spent $317 billion on home repairs, maintenance, and stuff like that, which was up the first time really it's been up since 2007, 2008.
Yeah, and so that's part of what we talked about at the very beginning of the broadcast, which is you've got a lot of statistical measures in the economy that are very, very rosy, but I also mentioned that there's kind of this underlying rot with a lot of debt that's there. So that's really important to understand as well. So if you've got customers that are having debt problems, that's something that you need to start looking at, and you need to start looking at seriously, because if you have a customer that's got debt problems, then they may end up in the situation that we talked about before, where they're facing litigation, maybe a restructuring, hopefully not some sort of a Chapter 7 liquidation bankruptcy. So you're right in talking about economic cycles. That's something that I spend a lot of time talking about and writing about. And we are well overdue in this economic cycle for a variety of reasons. That, some of it's beyond the scope of this conversation.
Sure.
But that's important to understand. And so when I make those observations, it's important for the small business owner to have that cash reserve. To call, people used to call it a rainy day fund.
Yeah.
That's important to understand and to know that having a rainy day fund is not a bad thing.
No, I agree. This has really been awesome. Thanks so much for sharing your expertise with us today. And
Dave, it's been a pleasure being on your show.
Great. Well, how can our listeners connect with you?
My consulting business is at sentinelconsulting.biz. So it's SENTINEL consulting.biz. That's where my consulting practice is, where we talk about what we mentioned today, alternative finance and debt mediation. For those that are fiction and nonfiction readers, you can go to my author site at jimmosquera.com. That is JIMMOSQUERA.com. Again, for those that like to read on, fiction and nonfiction topics, I've got books in good old-fashioned print paper that you can hold between your fingers, e-books, and also audiobooks for those that would rather listen.
Cool. Awesome. Well, again, thanks so much for being with us and sharing your expertise with us. I know that our listeners are going to get a lot out of this. I got a ton out of it today. So I really appreciate you spending time with us today.
Dave, it's been a pleasure being on.
Thank you. Hey, everyone. Thank you so much for listening to today's show and investing your time with us today. Being a contractor myself, I know all too well how precious time is when you're running a contracting business. And I want you to know that I take your commitment to grow your business very seriously. And as I said, it is the reason I created the Contractor's Secret Weapon Show. My goal is to share daily not only what works, but also share what didn't, so you can avoid some of the painful and costly mistakes that I've made. In addition to this show, my team and I offer various training and coaching programs, including a limited number of private coaching opportunities where you can work with me personally to help you grow your business. I encourage you to visit our website at contractorssecretweapon.com, where you'll find hundreds of additional shows, some free information on you can build your business, and you'll find my contact information if you want to explore working with me privately. So that's a wrap for this edition of the Contractor's Secret Weapon podcast. Be sure to stop back at this time tomorrow for another great episode, or you can go to iTunes or Stitcher and sign up and have it downloaded and delivered to your phone each time it becomes available.
Now it's time to implement what you've learned and grow your contracting business. Great ideas are nice, but results only happen through action and implementation. So learn more about Dave Negri and how he can help you take your business to the next level, get some additional free business building information, and listen to additional shows. Visit contractorssecretweapon.com. That's contractorssecretweapon.com. And remember, the more you listen, the more you'll have an unfair advantage over your competition. And who doesn't want that? See you next time.